Good morning, a warm good morning to all respected dignitaries, esteemed speakers, my professional colleagues, and dear participants. It is my privilege and honor to welcome you all to the 34th webinar under the ICI Global Udan Initiative, a visionary and a forward looking program of the Institute of Chartered Accountants of India. I am CA Suraj, a practicing chartered accountant having experience in taxation compliance and business advisory. I am actively support MSMEs, startups and corporates with regulatory, financial and strategic consulting. And I'm also engaged in training and mentoring CA students and regularly contributes to professional development initiatives through seminar and webinars. The Global Udan Initiative represents ICI's strong commitment to empowering chartered accountants and Indian businesses expand beyond borders, build global capabilities, and tap international opportunities. It serves as a platform for knowledge sharing, cross border collaboration, market readiness, and leadership, enabling professionals to contribute meaningfully to India's growing presence in the global economy. Through this initiative, ICI continues to inspire innovation, internationalization, and excellence, equipping members with insights into global regulations, business structuring, overseas expansion, and emerging international trends. Today's webinar is another step in strengthening this mission, bringing together expertise, experience, and practical insights to help our fraternity and business community scale globally with confidence. As Indian businesses and professionals increasingly engage with global clients, the importance of a strong regulatory and compliance framework has never been greater. Serving global clients requires not only technical excellence, but also a deep understanding of cross border framework, international taxation, foreign exchange regulations, data protection norms, transfer pricing, and jurisdiction specific compliance requirements. In today's interconnected world, compliance is not merely a statutory obligation, it is a trust building mechanism, a risk management tool, and a strategic enabler for sustainable global operations. And chartered accountants plays a crucial role in helping global clients navigate complex regulatory landscapes, ensure adherence to evolving legal framework, and maintain transparency, governance, and ethical standards across borders. This session under the ICI Global Udan Initiative aims to equip professionals with practical insights, regulatory awareness, and actionable guidance to effectively manage compliance for global clients, enabling us to serve international markets with confidence and credibility. I'm confident that today's discussion will add immense value to all participants. It is my privilege to warmly welcome our eminent speaker, CA Harshvardhan, for today's session on regulatory and compliance framework for global clients. CA Harshvardhan specializes in the intersection of global regulatory reporting and risk management, bringing over 14 years of experience as a chartered accountant in designing and strengthening compliance framework for global financial institutions. He has developed deep expertise in Federal Reserve regulatory standards, risk and control self assessment frameworks, and the implementation of robust compliance and governance models. With an impressive leadership background at Deloitte and Goldman Sachs, he has played a pivotal role, an important role in driving internal control testing and delivering strategic audit ready process improvements. His work reflects a strong commitment to risk mitigation, regulatory compliance, sustainable compliance, architecture in complex global environment. And we are truly honored to have him with us today. And we look forward to gaining valuable insight from his experience and thought leadership. I now invite CA Harshvardhan to take over the session. Sir.
Thank you so much, sir. Thanks for the great intro. Thank you. So as we know, so it's basically this initiative is basically for the global clients that we are taking care. So as we now know, in the past few years, it's not basically for the chartered accountant, we can restrict with the boundaries within the India, we can work for the globally. Since in this session, we are trying to cover practice as well as the job scenarios. If let's say you are in practice, you are in job, what exactly the help that we can provide you, or what exactly the knowledge we want to share with you. If you are in job, so you can take a care, okay, what exactly the global client is. There are multiple, you can say MNCs we have in the India. Now they are working accordingly. So we need to take care of that part also. And of the other side, if you are in practice, we are trying to create a framework. If let's suppose you have a new client or you are approaching a new client and then you get to know, okay, global client you receive, then how you need to create a framework. So what is the role of a chartered accountant in this global, you can say in global UDAN, or you can say in the global site or the global client age. So let me share my screen and then we'll start the session. So let me know it's up when it's up. So is it visible, sir? Thank you so much. Thank you. So as we know, today's session is on the regulatory and compliance framework for a global client. So what is the difference between a global client and a Indian client? So if we talk about the Indian side, if you're working for an Indian client or if you're working for an Indian MNCs, so we need to take care of the Indian regulation. And if you are working for global clients or the MNCs that working for the multinationals, then you need to take care of the other regulation that apply on those countries. So we can start with that. So before starting that session, I want to let you know, okay, what is the regulatory compliances and what is the compliance differences that we have. So generally we know a term regulatory and then we use as a term as a compliances. So what is the difference between that? So just take a pause, have a look on that slide. So we'll explain that one. So if we talk about the regulatory is basically a force or an external factor that they apply their regulation on us. If let's suppose we take an example of a bank or any industry, either it's hotel industry or it's a banking industry or any industry. So we must have some kind of regulation on that. If let's say we are talking about India, we have on the banking, we have RBI. They impose lot of regulation on banking side. If we talk about the US, UK, then we have the FRB, then we have the BRS. So they are imposing lot of regulation on that. On the compliance side, if we talk about, it's more or less the internal things. We are creating internal controls. We are checking our operations. We are checking our day-to-day activities, or what exactly the policies that they have applied. If let's say in regulation we receive from any regulatory bodies, so we need to comply according to that. So the major difference is basically regulatory is basically external force that we receive from any regulatory bodies, then we need to follow. And compliance is on the other side, it's basically an internal control that we need to take care the policies that they have enforced on us. We should take care those are complied completely. So if we talk about the regulatory side, so more or less it's mandatory. If you miss anything on the regulatory, it will impose a heavy fines. And if you moving on the compliances side, it will cause reputation loss or the financial losses, right? Let's move to the next slide. In this slide, we are trying to cover what is the difference or any scenario as we explain on the banking side. If let's suppose we are talking about the regulations, the regulation is saying you need to comply or the bank should comply with the Basel requirement. Then they need to follow the liquidity stress scenarios. They need to follow the credit risk management, market scenarios. These are the regulations should impose from the client side or the regulation side. And on the compliance side, talking about a bank can impose different internal controls. Like it's a customer protection, data privacy, or we can say the KYC. These are the few things that you should need to take care. So if we take an example, so regulatory is more or less a external thing. that they impose lot of regulation on us, and the compliance is basically we need to follow those regulation, and then we need to check those regulation are completely followed or not, right? Let's move to the next one. So now, when before creating a framework, if let's suppose we are trying to create a framework for anything, either it's a new client or it's some other existing client, we should know what is the role of a chartered accountant, or what is the critical thing that we need to take care, right? Before creating a framework, we should understand what exactly we are doing, why we are doing, and what is the purpose behind that. Because it's always easy when you get to know what is the purpose, what is the issues, and what exactly the expectation of client is. If you are clear on all those scenario, it's always easy for you to create a framework. If let's suppose we don't know what is the client expectation, so it's not easy to create a framework for him. If client is expecting that you should follow the risk management, or you should focus on the revenue leakage, but you are working on the internal control side, that you are saying, okay, your fire norms are clearly great, or you are doing on the great on the fire norm side, or the building is look like great, it will not basically match, or will not get the such kind of expectation that you are getting from your client. So we should know what is the client expectation, and what is the role of a chartered accountant in regulatory and compliance framework. So as we know, since we are chartered accountant, as we know, we are expert in financial reporting, risk management, taxation, internal controls, regulatory interpretations. But now in this session, we are trying to cover, apart from that, these are the things that we can do. Since everyone knows, if the first thing came into the mind, being as a chartered accountant, what is the role in your, what is the role or responsibility of a chartered accountant? It's always come, okay, we need to check the numbers, we need to report the numbers, we need to check, okay, taxation is comply, internal controls are correctly mapped or not. But now we need to think beyond of that. It's not basically we need to check the numbers only, we need to think about that, okay, the numbers coming from the system, whether there is any risk, is there any breach or any compliances, is there any breach of any regulation. So we need to take care all those scenarios into that. These are the parameter we should know, and then we need to comply, right? Let's move to the next slide. Now I categorize all the compliance framework in four different segments. First one is the strategic and the governance. Second one is the financial. It's close to our heart, since when we are talking about the chartered accountant, it's always we are love that financial side or the taxation side. Then we move to the next one is the risk and financials. Then we need to check the if there is any issue with the crime or any activities that involve it's not as per the business regulation. Or the last one is the digital operation. In the past few years, it's increased rapidly, because more or less everyone knows prior we were doing manual things, now we are trying to do the things automate. So when you are doing any automation, or if you are working on any automation, you should think how automation will work, and then how you can check that automation, right? So covering that one, if you are having a global client, you can take in both the side. Either you are approaching to a global client, or you already have an existing global client. If you are approaching a new global client, what exactly the framework that you need to design? Or if let's suppose you already have a global client, or you are working for a global client, then what exactly the parameter, or what is the framework that you need to follow, being as a chartered accountant, right? Let me move to the next one. So if we talk about the first one is the regulatory interpretation and compliance, what is the role of a chartered accountant? Why I am focusing on the role of a chartered accountant? Because issue is that when you get to know what is your role, then you can create a effective framework. If we don't know why the client hire us, what is the role and responsibilities, and what is the expectation client is having from us, then it's not easy to create a framework for him. So it's always good to understand what is the role, what is the responsibilities, what is the expectation, and what exactly we want to achieve. If we conclude all the things, it's always good to create a framework for a client. Effective framework only work when you know the entire path. If you don't know the path, it's always difficult to create a framework for any client, right? So now we move point by point, or we can say go line by line. If we talk about the first, we are doing a regulatory interpretation and compliance advisory. What is the role of a chartered accountant? As we know, there are a lot of regulations apply on the global clients. So it's not easy for a client. They can understand and they can interpret it. So what is the role of a chartered accountant? We can pitch in and we can say, okay, for you, we can read the complex instruction, overlapping regulation, cross jurisdictions. If let's suppose your client is working in different segment, different countries, then you can help him, and then you can say, okay, these are the regulations are applying on you, and these are the cross-border jurisdiction that's applicable on you. How we can say? We need to create a proper documentation. We'll cover in going forward or in the next few hours. So we'll cover that documentation part as well. What exactly the documentation is, how we can create that documentation, what exactly the approach we need to follow, where we need to save, for how long we need to keep, these are the all scenarios that we need to take care. Now, next move to that next part is basically the transparent regulatory requirement and the business control and the policies. As we know, when a new client or existing client is working, we should focus on the regulatory requirements. Since it's a global client, we can't miss the regulatory requirements or the compliances. So we need to focus on that. And the second part is that you need to check the entire controls, whether control are effective or not. Because issue is that if we miss the regulations, then we need to pay a penalty or maybe cancellation of license. And if we miss the internal control, then it's a reputation loss or a, you can say, the financial loss. Then next move to the next point, advisory management and the regulatory assessment for new product. Then we have the restructuring or expansion. As we know, if let's suppose the client is approaching for a new product or they wants to expand their business or doing any restructuring, in normal scenario, the CA terms we use as a merger, acquisition, or restructuring word. So what is the role of a chartered accountant? How we can create a framework for them? So when they are doing or entering a new product, you should know about the product. Is it beneficial for your client? Is the line or the segment that client is using is correct or not? If there is any expansion, you should check what exactly the impact of those expansion. It will increase your cost, parallelly increase your profit or not. If there is any scope or any improvement area, you should suggest, and then you should create or include in your framework, right? And then coming on the restructuring, if let's say your client is working not doing good, or if he's doing good but he wants or she wants to do a restructuring in your business, then you should think, okay, what exactly the parameter that you need to follow, and then you, according to that, you need to create a framework. Reason for covering these points, when we get to know these are the role and these are the expectation, according to that we can create a effective framework. And the next part is that we can support our client in the change management or implementation or reduction of any compliance risk or any regulatory penalties or any other regulatory exposures. So if there is any, let's suppose if there is any compliance issue or any regulatory penalty, then chartered accountant can pitch in. It's a new scope for us. Then we can pitch in and then we can say, okay, these are the penalties. What is the reason behind that penalty? We can dig in there, down that one, and then we can check, okay, is it actually we need to pay those penalty, or we have any kind of remediation, or we have any regulation that we can follow, and then we can present to the government or we can the regulatory authorities, right? Let me move to the next one. The next is the financial reporting and statutory compliances. What is the role of a chartered accountant in financial reporting and statutory compliances? So chartered accountant should ensure that compliance with IFRS, US GAAP, and NDS. Since if let's say it's quite possible your client is working in different segment, then you should check which is the applicability. If it's working on apply on the US GAAP, IFRS, or NDS, or maybe quite possible all three should apply on him. If you have a client or if you are approaching to a client and it's a expansion side, or he or she working in different countries, then you should think, okay, which regulations are applied and then how we need to tackle, and then according to that we'll create a framework for him. In terms of framework, I will cover in the last of that slide, and then I will show you what exactly the step you need to follow while creating a framework, or any steps or any checklist or any compliances or anything that we need to follow. The next role is basically we need to work as a group audit, because it's possible that your client is working on different segment and they have multiple persons who is doing the audit. Then you should think, okay, if let's say different other auditors are also working, should coordinate with them. The next part is the filing of regulatory returns. You should prepare that return and you need to file on that timely basis. The next part is that reconciliation with different segment. If your client is working on multiple location or you are reaching out to the global clients, then maybe quite possible they are working on different segment. Then you should reconcile those things. And or a consolidation requirement. If let's say at the end of the day, then headquarter they need to do a consolidation, then you can help them on the consolidation side as well. Or you are coordinating with different auditor and regulators. If they are working in different auditors, so we need to coordinate with them. Okay, if there is any observation, if there is any breach, some kind of thing, we can relate with them or we can coordinate with them. Okay, this is the parameter that we find. Or if you agree, then you can say, okay, these are the things we agreed. Or if you disagree, then you should say, these are the my expectation, you should change accordingly, or these are my suggestion. So when we get to know these are the rule, then according to that we create a framework. So these are the basically compliances and what we are trying to achieve with that. So first we need to regulatory disclosures. We'll do what if let's say find any discrepancy or something, then you do a regulatory disclosure, then you create a complete financial statement and audited document. What is the importance of that? If you notice is basically when you are creating or you are doing an audit and you are creating a framework for a new audit or a new client, you should think, okay, these are the steps that we need to try to achieve. When we achieve according to that, we'll follow the same pattern, right? So let me do one thing. Let me move to the next slide. So we are trying to cover a few example here, how we can approach. If let's suppose your client is listed in India, then India AS is applicable on that. If let's suppose dual listing, it's in India or overseas, maybe quite possible it's applicable on both the accounting standard as well as IFRS applicability on that. If subsidiary we have that, maybe quite possible it's IFRS, US GAAP and Ind AS. Then we need to do a reconciliation between that. It's a UK or European entity, IFRS is applicable on that, and if listed in US, so US GAAP is applicable on that. Why we are covering? So reason behind that, in the global client, it's not we straightforward. Again, we can say, okay, one regulation is applied. Maybe quite possible multiple regulations are applied on that. So we should take care while creating a framework. These are the parameter or these are the regulations are applicable on him. If let's suppose things are applicable on accounting standard, we should know, okay, these are the accounting standard we need to take care. These are the US caps, these are the IFRS applicability on your client, right? So these are the things you should think while creating a framework. Now moving to the next slide, which we are trying to cover, these are the examples. Basically, if let's suppose you are doing a stat audit, so applicability of US GAAP, IFRS, Ind AS, all applies on that. If you are doing a SOX audit for your client or you're creating a framework for SOX audit for your client, so it's majorly that US GAPs are applied, Ind AS is not part of that because SOX is differ from the internal audit. And if you are doing an internal audit, it's quite possible GAPs, IFRS and Ind AS are apply on that. Then coming on the regulatory filing, so if it's a GAAP side or US, then you need to file on the SEC or IFRS, maybe regulatory local regulators, or the if you are going with the Indian AS or INDES, then it's will be SABI or MCA. So these are the parameters that we are trying to cover if you are doing a consolidation. So while creating this parameter, it's a framework, you should know the applicability of rules, regulation on your client. If you are doing a consolidation, which GAAP is applied, which IFRS is applied, which index apply. As we cover, if let's suppose you are doing a consolidation, so GAAP on the US GAAP, you should know is 810, then IFRS 10 and index 110. So when we get to know, okay, these are the regulations and these are the compliance applying your client, then we can create your framework. Because if we don't know which is the applicability, which is the rule regulations are applying on our client, it's not easy to create a framework for him, right? Let's move to the next slide in which we are trying to cover a few more example. If let's suppose you are doing inventory valuation. So US GAAP says last in first out is allowed, but if you go IFRS and Ind AS, they don't allow last in first out. So that's the main thing that we can think while creating a framework for a new client or existing client, whether the applicability of those laws are applied or not. So you should go into the detail. These are the regulations and these are the compliances that we need to follow. According to that, check those regulation in deep dive those into that regulation and then get to know, okay, what is the applicable on your client before creating a framework. right? If you are moving to the next one, it's talking about the financial instrument. Then financial instrument, as we know, so it's IFRS 9 is applicable on that. Then on the US GAAP is talk about the 3201, 320, and then we have 825. On the India side, it's apply 109. The same, we have few more example revenue recognition. Then we have leasing, then we have OCI. Leasing, we know, okay, IFRS 16, then Index is 116, and then we have the US GAAP. So when we get to know what is the applicability on our client, then we can suggest a great framework for him. If let's say we are lacking some kind of thing, or we are not clear about the regulation, then it's not easy to create a framework for them. So ideally you should clear about the framework that you are preparing and the regulation those are applying on your regulators. What is the regulatory requirement? What is the compliance on your global client, right? Let me move to the next slide. Now coming on to the internal control and SOX compliances. Then what is the role of a chartered accountant in internal control and SOX compliances? First, we need to design, assess, and test. So since we are the chartered accountant in term of the auditing side, what is the first thing came into our mind in internal control? First, we need to design, then we need to assess, then we need to test the internal controls over the financial reporting. What exactly they are paying, is it correct or not? According to that, we need to create our framework for our global clients. If let's suppose we are designing, then we should think what exactly the parameter is, how they are creating, how they are working. Then these are the points we should consider, right? The next point is coming on the SOX side. SOX is basically you need to comply if you are a global client or the US client, SOX is applicable on that. Then you should think what exactly the, or you should take a walkthrough, you should sit with your client, and then or you can set up some time with your client, and then you get to know, okay, how things are moving with the business or how business is growing. When you know what are the parameter or what are the steps they are following, according to that you can create a framework. Why we are not saying, okay, these are the steps that you are following and we are not aware, we can't create a great framework for him. When we know each and every step for your client or each and every step, then we can create a great framework. Then moving to the next, if let's suppose you are identifying any control gaps or any, then you should identify the root cause analysis and corrective action. So we are not only just checking the internal control. When we find any gap, you should know what is the root cause behind that. While creating a framework for your client, you should understand this is the root cause of that error. According to that, we can create a framework, and then we should know what is the corrective action. The reason behind the corrective action is that when we know, okay, these are the issues, and then how we can mitigate that, according to that we'll plan a framework for him. We know, okay, these are the things where we are the changes that we need to apply. We'll follow those changes and we can say, okay, these should be applied from your side or from the auditor or from any point of person. Then they should apply and then we'll get the expected result. The second next point is we are talking about, then we support the audit committee and senior management. So we need to create some kind of dashboard or some kind of, you can say, the footnotes or any other supporting that the higher management or the committee is required. It's the role of a chartered accountant in a global client that we should create the kind of such kind of report for a senior management. It's not easy for a senior management to go the entire report. So what we are trying to achieve, or we are just creating a summary or kind of a dashboard that highlight, okay, what exactly the control that we are following. Is there is any issue, is there is any lag or some kind of a breach, then we need to highlight that one, right? Let's move to the next one. In terms of control, I try to cover what exactly the control is. So we are not going into so much deep since it's not covered in this session. So I divided the majorly the control is divided in two parts, where there is a preventive control or a detective control. Preventive control is basically you apply those control or take those actions before occurrence of that event. On the detective, the event has already occurred. Now we need to identify. If we take an example, if let's suppose a new vendor is approaching to your client, and then you already create a list. How you create a framework? If let's suppose a new vendor is approaching to your risk, we are checking, okay, all the documentation will check when then he reach, and then we review all the documentation. On the other side, we create a list of vendors. If let's suppose any when is coming under that list, this should be blacklisted or any due to any reason. It's a preventive control. Before applying that, you already know, okay, it should not be allowed. Or if let's suppose there is any kind of parameter, you should know, okay, vendor should having 10 year of experience, 15 year of experience, you can put in your controls. When he or she may apply, then he or she may check, okay, 15 year of experience is required, but he is not having such kind of experience, then it's, you should ideally just get rejected. On the other side, we are talking about the detective controls. So preventive is before occurring that event. Detective, it's event already occur. If let's suppose you are doing any checking any payment in your, for your client, then how will you create a framework? If person is doing a payment or you are doing a payment to some other clients or as for your businesses, or you can say your vendor, then you should check, okay, these, if let's suppose there is any duplication of payment, then you should check, okay, what is the internal control. You are checking the invoicing. If there is any duplicate invoice, you should take the corrective action. Or the 4i check is also part of that. If someone is approving any payment, then it should be reviewed by someone else. So these are the few points you should consider while creating your parameter for a global client or any frame that you are creating for a global client, right? Let's move to the next one, in which we are trying to cover what is the SOX and then what is the internal control. As we know, SOX is more or less on the US side. Then we need to take what is the US regulators are imposing and then what they are following. So what they are trying to achieve. On the internal control side, what we are trying to cover in internal control is basically the operational risk, compliance, and financial risk. So we need to focus on the internal control. Majorly the regulation that those are applying on the industry or your client, you should validate through internal control if those regulations are correctly followed or not. If let's suppose a regulation are imposed or they are saying that you, for US or then any other agencies they impose, these are the regulations should be applied. If let's suppose take an example for banking, hotel industry, schooling, if let's suppose any hotel is in multiple world countries and there is a kind of regulation on that, so you do a SOX audit. While doing a SOX audit, you should check what is the internal financial controls, and while doing an internal audit, you should check what is the operational risk, what is the compliance risk, and what is the issues that we are identify. It's not basically the financial side internal audit. So you have the multiple other segment, you can check the operation as well as the compliances. So internal audit is more or less what we are imposing on us. We should check things are applied correctly and we are following those regulations, right? So this is the major thing that we need to cover in the SOX as well as internal audit, right? Let me move to the next slide. Now coming on to the risk management and regulatory assurance. As we know, since we are chartered accountant, we always think, okay, what our role and responsibility, we need to check the taxation, we need to check the numbers, we need to file the regulatory reporting. But apart from that, we need to think what we can do and what we can provide to our client. If let's suppose we are approaching to a new client or you are creating a framework, don't stick only on the financials or only on the number or only on the filing of that returns. You can just increase your boundaries and you can reach out to other segment also. If let's suppose we are talking about that there are the multiple segments, then a chartered accountant can pitch in, identify and assess the operational, financial, regulatory, and compliances risk. So what are the risks? If let's suppose there is any risk involved with your client or any businesses, you should check and then you can suggest to your client, and according to that you are creating a framework, right? Or you can do a RCSA check. It's basically risk and control self-assessment. Then you need to check what is the parameter that the client is following and then how we can mitigate those risks. And the next step is supporting regulatory reviews, inspection, and we have any examination. If let's suppose you have received any kind of reviews or from the regulator you have received any responses or any queries, then you should think how you can or we can answer. According to that, we can create a framework. If let's suppose take an example, you receive a query from your regulator or they are not following any regulation or is there is any breach of regulation, then you, what exactly the framework that we need to follow for our client. First we need to get to know, okay, what is the regulation, what is the root cause behind that, why it's fail, then what is the corrective action that we need to follow. This is the action that we need to follow. If let's say we already failed that one and we are not able to comply that one, we should check the remediation, how we can remediate that one. It's already breached, we already fail on that, but it's not saying, okay, that client is not doing, then we need to take the other actions, how we can mitigate the risk. Then we need to check, okay, which regulations is applicable on us, what is the reason and why we are failing that, and what all our controls those are placed for that. If let's suppose we have failed some kind of regulation, then ideally all the internal control apply on those regulations are automatically failed, because the internal control that we build to check the regulation, if the regulation we are not complying, then internal control are not effective. So we need to think on the other side as well. So we need to go beyond our boundaries, rather than checking on the balances or the reporting aspect. We should think, okay, these are the risks involved with our business and we can pitch in for that, right? Now let me move to the next slide. Now we are trying to just explain what kind of risk that we have. We have already explained the previous slide. First, we are talking about the operational risk. We have the financial risk, we have the regulatory risk, and we have the compliance. What is the role of a chartered accountant here? So if we go one by one, what is the operational? Operational risk is majorly that we have day-to-day activity. If we are doing any activities on day-to-day or regular basis, then you have any failure or any risk involved into that. So what is the role of a chartered accountant? How we can mitigate that one? How we can create a framework for our client? Then we should think, okay, these are the operational risks, means these are the day-to-day activities. Maybe quite possible it's a system failure or it's a human error. If let's suppose take an example, you are going to buy something, or then you are trying to make a payment either with any app, but the app is not working at that time, so it's a failure of operation, because operation is not working. So we need to check behind that, okay, what is the reason behind that? If let's suppose someone is entering or someone is doing data entries, and the human, due to human error or something, then we get to, okay, these are the issue that we have identified. So what role of a chartered accountant we need to do, and how we need to create a framework for them. So role, basically chartered accountant came here as a RCSA. It's basically risk and control self-assessment or create an internal control for them. How we need to create a framework for our client, then suggest your client, if let's suppose any payment is doing, or if any chances of manual error, try to automate that process. If possible, try to automate. If you are not possible to automate, then do a 4i check. If someone is reviewing some kind of thing, then we need to put a person, another person, and then we can say, okay, this person should also review his work. If you go into the past, in the past we check, okay, let's suppose the two business, you can say two clients or two in a service industry, two employees are working and they decided, okay, they could do some kind of fraud or some kind of issues that they want to create for an organization. Then you should think, okay, if someone is reviewing, so the next one is approving, and the responsibilities are fixed, then quite possible it's a lack of, you can say, clarity, or if there is any breach of internal control. You should think about that, and then how you will create a frame on regular basis, change those person, or maybe quite possible you can say, okay, on randomly basis, first thing this person is approved and then second will approve. They don't know each other, who is the first approver and second approver, should such kind of, don't have such kind of transparency. Or these are the confidential we can build to avoid the operational issues or operational risk, right? Then moving to the financial risk. What is the financial risk? If let's suppose there is any kind of liquidity issue, if, as we know on the regulator side, if your client is following or covering in the Basel requirement, Basel are basically the banking regulations, or any hotel industry, there are any regulation regarding that, and they need to maintain some kind of financial, or if there is any liquidity, they need to maintain due to the regulations. As we know, so there are few other multiple report the client, global client are preparing, that's LCR, LDR. These are the returns that we need to focus. These are the liquidity returns that should be comply. So liquidity should be maintained each point of time. Regulator clearly mentioned in their regulation after Lehman in 2000, I think 2008, when the Lehman bank crashed. So there are a lot of different regulation imposed by the regulatory authority. Prior, a bank or the regulatory generally bodies generally apply 30-40 returns when the issue happen or the Goldman is not working correctly. So sorry, Lehman is not working correctly, and then there is a collapse. So they impose lot of regulation on the banking side. So they create multiple returns, and then according to those written, they have creating different segment. Now what we need to check, so expectation from chartered accountant, you should think, okay, take a key example we are addressing here. If let's suppose you are taking any loan, and the parallel decide after a month or 2 months the bank has increased the interest rate, then it will create a financial impact on you. You should create the buffer for that. If when you are creating a framework, you should think, okay, if let's suppose in going forward such kind of scenario happen, then how we can tackle that one, right? Then move into the regulatory risk. What is the regulatory risk? If let's suppose there is any change in the regulation, as we know in the past, if you know about that, they have imposed taxes known as pillar 2 tax, that's known as GMT, it's global minimum tax. If let's suppose any government impose such kind of taxes, then how your client will fix those issue, and then how you can help your client. So you need to think about those scenario as well. It's not easy to predict such kind of regulation, but you should aware, okay, when you are creating a framework for your client, you should know the past and how things are moving in the country. If you are saying, okay, the tax are already imposed, or maybe quite possible in future they are going to increase degree, you should think while creating your drafting your regulations for your client, right? On the compliances side, if let's suppose any regulation or any regulatory body impose any regulation, you should think, okay, the compliance are followed or not. If let's suppose take an example, if regulator says, okay, RBI or FRB impose a kind of regulation, if any person who is depositing more than 1 lakh rupees should get a, you should submit your PAN card or whatever document they required, or any approval, such kind of thing. Or if they impose some kind of regulation, if more than 10 lakh if someone is depositing or any withdrawing, you should report to the RBI or FRB. Then you should think, okay, these are the regulation are imposed by the regulators, and then you should clearly create a separate control from them. Okay, these are the control that those are comply, those are regulations that imposed by the regulatory authority. If there is any failure in those compliance, will create a lot of issues for us, because issue that may be quite possibly they will cancel your license, they impose a heavy penalty on you, right? So have a look on this, take a 5-10 minutes, and then we'll move to the next slide. Okay, let's move to the next one. Now, what is the role of chartered accountants? It's always close to our heart. It's basically the taxation and transfer pricing. So as whenever we just know, or we just heard this term taxation or the financial, it's always good for CAs. So as we know, if the global client, while preparing a framework, you should understand which are the tax applicability on them. You should ensure the compliance with the international taxation. We have double taxation avoidance, we have BEPS, the pillar 2 taxations. Which are the taxations or the regulations are apply on your client? So you should create framework according to that. So these are the parameter you should think, okay, these are the norms that they need to follow. Next point is that manage transfer pricing documentation. When you are doing a taxation or any transfer pricing or any documentation, you should be clear about that. While creating a framework, you should know, since it's not easy, because if you're working for a Indian client rather than a global client, what we are doing, so Indian client, we are creating our documentation, we keep those documentation our offices. But if let's suppose a client is a global client, it's always difficult how you will save. And if let's suppose they wants to check that documentation, then how we'll do, then we agree on that, okay, we'll use either any system or SharePoint or any drive that they want, then we'll save all the documentation on that portal. And you shouldn't check before the creating that framework who is going to be at that cost, who is going to take the responsibility. If let's suppose there is any failure of any system, or if there is any failure of the storage, then who is responsible for that? Either we are the one who is responsible, or we need to take the responsibility, or they will take the responsibility. So you should be clear on that your framework or your steps, that which step they need to follow. While you're storing any documentation, you should be clear. If we are the one who is responsible, you should take the required action. You should create different control. If they are the one who is responsible for the documentation, you should say them clearly, these are the controls that we have already built, then you need to take care of those controls, right? Then if we are talking about to the next part, it's talking about the tax efficiency and the cross-border structuring. Since we are working for a global client, or we are approaching to a global client, maybe quite possible they are working in different countries, and then different tax applicability on them. we should be clear, okay, cross-border structuring, how it will work, what is the tax efficiently. If let's suppose we have some kind of tax haven and then we are creating your business in other country, and it's quite possible your client can shift the process, or then they can move the operation to one country to other country, then you need to create a framework accordingly. You can suggest your client, okay, these are the things that are helpful for you, and then with the help of that you can reduce your taxation part, or you can just avoid such kind of high taxation to move to the low taxation. Or let's suppose if there is any double taxation, you can suggest your client, okay, these are the double taxation that are applying on you. If we can follow such kind of method, or you create a such kind of framework for your client and then help them, okay, these are the parameter that we need to follow, and with the help of that parameter we can avoid such kind of double taxation avoidance, or any kind of, we can say, reduce the taxation, or whatever benefit that we can provide to our client. So we can create the framework accordingly, right? So now we are trying to cover what is in this slide. We are trying to cover the what is the international taxation, and then we are, as we already explained, what is the role of a chartered accountant. We are double taxation avoidant agreement. Then we have the profit shifting, or the two pillar. Two pillar is basically the GMT, is known as global minimum tax, that they impose 15%. And then these are the parameters you should think while creating a framework, right? Just have a look, and then within 5 seconds we'll move to the next slide. Okay, moving to the next slide. So now we already talk about the internal controls. We already talk about the risks. Now, what is the new area, or we can say the new opportunity for a chartered accountant? It's new, basically, and we are talking about the anti-money laundering or the financial crime compliances. So these are the compliances that apply on your global client. So you should think, okay, if your client is working with any other countries, or if your client is working with the other, following other norms, then you should check whether they are following the correctly or not. You should know what is money laundering is, and how we need to mitigate those risks. So how we can design that framework, design and assess the KYC and control framework. You should create a control framework for your client. If there is any anti-money laundering procedure, you should build that one. Okay, if let's say you're working with any country, you should check if there is no regulation from the regulatory, you can't work with that country, because a lot of countries now these days, they are imposing a lot of penalties on if you are not following that one, or if you are following, you are working with some other countries and they're imposing a lot of taxes. So you should think while creating a framework which country is beneficial for your client, and then how you can just give a benefit to your client. And the same thing on the next side, we are talking about the conduct transaction monitoring review. What is transaction monitoring review? When you are doing a transaction with any, you can say, legal entities or any supporting entities or any other entity, you should check those transactions should be comply with the regulation. If there is any breach in the regulation in that transaction, we need to pay huge fine for that. So while creating a framework, it's the role of a chartered accountant, it's our responsibility. We should understand what is money laundering, and then how we can avoid such kind of money laundering things, and then we need to know these are the steps that we need to follow, right? Then we can, all the other, we can check the supporting other regulatory reportings, and then other activities. If let's say any suspicious activity, you should think, okay, these are the activities that happen in the client business, or its client is not aware, then you should create such kind of control in your framework while creating for your global client. Okay, if there is any suspicious activity or any transaction, it should be checked twice or thrice. It should be approved from someone from the higher management, so that they can know, okay, these are the approvals they have given. And if let's suppose any breach, such kind of thing, you should immediately highlight to your client, okay, these are the breach and these are the steps they have taken, what exactly the regulation that we need to follow. You should think about that. You should go into the detail and then create a root cause analysis. Okay, this is the failure of that reason why this entry is not correctly mapped, or this is the failure of that entry, what is the causes, what is the remediation. If let's suppose you have already in the system, it's already done, then what is the regulation or applies on you, then which is the breach of that regulation, what is the compliance, and then how you can mitigate those. So create such kind of framework, and then according to that you need to design that framework, right? Let's move to the next slide. So in this, we are trying to cover the same thing, anti-money laundering. We are trying to explain you what exactly the thing that you need to follow while creating a framework for a anti-money laundering or financial crimes. So first we need to check, okay, what is the KYC, global KYC is required, know your customer, know the transaction, what they are doing. You should go into the detail while creating a framework. You should create such kind of control or such kind of parameter. If there is any transaction, you should know who is approving, who is responsible, and who is going to take the ownership of that. Clearly document into that. Next one is, if let's suppose any transaction monitoring, you can screening, then it should be 4i or any regulations. If you think so, any breach of any regulation, you should think, okay, who is the approver of that. Even you can check on the regulation, or if you want to reach out to the, either in global side, if you want to reach out the regulatory authorities, those are impose those regulation, you can check with them, okay, these are the transition we already done, what we can do, how we can reverse from them, and how we can try to avoid such kind of penalties or any issues we got that, right? Then we have the regulatory trainings. You should create regulatory training for your either client or for the staff of the client. It's not always that we need to just filing the returns. We should create a regulatory awareness. Okay, these are the sorry, these are the regulations applicable on us, and then these are the trainings that we have created. So just give the training to your client while creating a framework. So these are the regulatory returns we are preparing, and these are the training that apply on that, and these are the regulation we need to follow. So it's not easy to explain everything to your client. We agree on that, but just give a brief about your client. If let's suppose a person is doing day-to-day activity, just tell them, okay, these are the steps that you need to follow. For that, either you created some kind of documentation or regulation you can share with the client or the person who is doing day-to-day activity. While creating your internal control, you can say, okay, this is the checklist they need to follow. If let's suppose there is any restriction with any country that you are doing any trade, you should create a list. Okay, any country covering into that list, you should know you are not going to do any transaction. So these are the type of controls, or these are the type of framework that you need to create, right? Then moving to the next one. Then we have the regulatory reporting and then liaising with the authorities. So first we need to check, okay, what is the role of a chartered accountant? First we need to create a regulatory report, and then we need to submit or file that returns. Then we need to, the second step is, once we are creating the regulatory return, there may be quite possible then we sometime we need to liaise with the regulators or the auditors or the other bodies. So you should know, okay, while creating a framework, you should create in so much detail. Okay, let's suppose a regulator or any regulations breach or any kind of, we can say, any questioning from the regulator, how we are going to address that one, who is the responsible person, who is going to take care of that part. If let's suppose you have multiple auditors in different segment or different countries or different locations, so you need to check, okay, these are the auditors, those are working on what exactly the role and responsibility behind that, who is going to take care, what exactly the parameter they will follow, and who is responsible for which point of time, right? The next one is the, if let's suppose you receive any queries or inspection, you should support. While creating a framework, you should design into that way. If let's suppose you receive any query from the regulator or any inspection, then we need to create a framework. Okay, these are the steps that we'll follow, and then these are the person who will pitch in. If let's suppose someone is working on any transaction, or he or she may knows what is the breach behind that transaction, what is the reason that we have posted that transaction, should involve that person. Okay, mention that one. Okay, this is the process that they have followed. You should be clearly mention our entire process or the transition that you are doing in your framework for any global client. Then majorly that we need to focus on the accuracy timeline, as because issue that if let's suppose we breach any regulatory returns, or we are not filing on the time and the accuracy is not correct, or we are reporting the wrong number, may cause a lot of penalties on your client. So while creating a framework, you should think, should the reporting should be accurate and on timely basis, and it should be submission should be on consistently. We are not saying, okay, within a month we are just lag. If let's suppose take an example, if your client is working on different segment or different locations, and then they have decided on that day and they all need to submit your balances to your headquarters, so ideally you need to shift the entire amount to your headquarters. If let's suppose they have imposed such kind of controls, each branch or the different segment that we have can't put more than 10K as a buffer in a day end. So you should think while creating the framework, okay, these are the imposed regulations from the HQs, and then we need to follow those. And if let's suppose any regulator has put any regulations and the regulator is saying on the day end we need to submit the entire to our HQ, and then consolidation is doing on that pattern, you should think and you should include that one in your compliance, right? Now moving to the next slide, the compliance technology and data governance. If you talk about the compliance technology and data governance, what is the role of a chartered accountant? Now we know these days most of the things are moving from manual to automate. People are trying to achieve the automation either through AI or different tools that they are using. So what they are trying to achieve. So what is the role of a chartered accountant? We can support an implementation of RegTech solution. If let's suppose they are migrating one system to another system, or they are trying to apply a new system, how we will create a framework for our clients. For a global client, if let's suppose they are using any software, or they were using any Excel system kind of, now they want to move to the ERP or some Oracle kind of thing, or the other system, what we can do, or what is the role of a chartered accountant, how we can create a framework for him. First, we should understand what they want to achieve and how they want to achieve. If let's suppose take an example of a automate thing, if let's suppose your client is doing manually, now they want to shift to ERP or Oracle, and it's doing a automation. First you check the BRD is basically a business required document. When any person is enter into a automation side, or they agree with the system, or the person who is developing the system, they create a document known as business requirement document, what exactly they want to achieve. Then you can check that one document is correctly or not. While creating a framework for your client, you should include that one. If any new system is apply, or new system is there is any migration, or is there is any decommission on any system that we are dropping. Let's say in past we were using some system, now we don't want to use that system, you should include that BRD. Okay, these are the BRD. Now if let's say we are applying on the new system, include the new BRDs. What is the business requirement document? Then you need to check, okay, in your framework, we need to put the some kind of control. Okay, these are the accuracy, or these are the things that we are trying to achieve. On the audit trail side, you should maintain what is the audit trail, how they are achieving that one, and then how they are validating the automation part, right? Thank you. Let's move to the next one. Then we have the IT controls and the risk terms. Then we need to validate, okay, if let's say the automate control reporting system, then how we need to automate or validate the control system. Or on the other side, if let's suppose we have the IT controls, we have the compliance and risk, then we need to check the risk. Okay. So let's take a pause. Suraj, sir, any questions, anything?
Okay, sir. Can you hear me?
Yes, I can. Or if you want to take all the questions, if you have any questions, we can raise, or we can cover in the last. So we have still left
Yes,
with
sir.
few.
We can cover at the last. We can cover at the last.
Okay, no worries. Thank you. Okay. Okay, let's move to the next slide. So now ethical standards, when we are doing, so it's basically, we know ICA already created a lot of ethical standards for us, and then we need to comply with those things. So while creating a framework, we should understand what exactly we are doing and what framework that we are creating. So while we are doing a strong compliance, we should know what our ethics are, and then we should not compromise with those ethics. So we should always stick on our ethics. So these are the ethics that we need to follow, and it's always clearly communicate to the client. Let's say if we are talking about taking an example, the audit should be independently, then we should have some kind of transparency. So these are the ethics that you should clearly communicate on to your client and include in your framework. When you are doing a framework, creating a framework for your client, you should include, okay, audit should be performed independently and should be transparent, right? Now moving to the next one, then strategic value of the global client, what exactly we trying to add our contribution, the global expansion. So when we are including what role of chartered accountant we can support in, as we already discussed, we can support in merger, acquisition, restructuring, or if there is any regulation conflict, then we have any kind of framework that we are creating. So this is, sorry. So till now, we're trying to cover what is the role of chartered accountant and how things will go while creating a framework. Now it's time to move to the creating a framework, how we need to create a framework. So first we need to understand which line of defense that we are working. So these are the categorization that I have performed. It's not basically from, we can say it's a standard thing, may vary depending on the business or depending on the requirement. If let's suppose we are working as a first line of defense, what is the first line of defense? What is the second line of defense? What is the third line of defense? Let me give you, we can say, take a pause and think. Let's cover that first line of defense, second and third, then we'll do a questionnaire. So first line of defense, person who is working on day-to-day activity, managing the day-to-day risk. If let's suppose if you are working in any organization, either in hotel or any industry, then you are doing a day-to-day regulations. So he is responsible of all the day-to-day activities to manage the risk, right? And then if you move to the second line of defense majorly cover the risk management and compliances. He cover the entire area of the entire risk and compliances, what exactly they need to follow. And the third line of defense is basically the audit person who is going to audit. Now take a pause and think which line of defense we cover. Either first line of defense, second line of defense, or third line of defense. Just think, take a 5 minute and 5 second and just think, okay, which line of defense we are covering. Being as a chartered accountant, what is the right fitment for us? So what my past experience says, 80-85% people will generally say, okay, we are the auditor since we are doing internal audit, so we are part of third line of defense. So my question for audience is it possible, can a chartered accountant be part of first line of defense or second line of defense? The answer is yes. How can it be possible first line of defense? If let's suppose your client is working globally and then they set up their unit in India and they ask you, being as a chartered accountant, you should post all the entries and then create the day-to-day activities, then you are working as a first line of defense, right? Or maybe quite possible that on the second side they were saying, okay, when you are creating the first line, you are performing the first line, they were saying, okay, you need to create some kind of issue management and compliances, then you need to check. Then chartered accountant can also be part of the second line and third line. That's the beauty of a chartered accountant, that he can fit in anywhere, either first line, second line, or third line. We can work on entire line of defenses, right? Let's go into more detail. So when we get to know, okay, which line of defense that we are working or some other person are working, then you can create a framework accordingly. We can't say, okay, if a client is reach out to you or you wants to create some kind of framework for your client, and then you are saying, okay, first line of defense that he is working, then you need to create a framework, because it's totally depending on the work and then what is the industry or the segment that you are working, framework get changed accordingly, right? Now, if we take an example of first line of defense, go into the more detail. So what is the first line of defense and what person is doing in first line of defense? So person who is working on first line of defense is doing that day-to-day risk management. It's working on the financial and operational risk. He's putting the entries, he's reviewing the entries, creating the reports, or then generating all the numbers for that. That's also known as first line of defense. Yes, a chartered accountant can be first line of defense if let's say you are working for any industry, if you're working for a MNC, you are working for a school, that global school we have, and then you are the one who is posting the entries, who are the one who is approving the entries, you are the one who is creating the returns, then you are the one who is working as a first line of defense. And then what is the monitoring that we are putting as a first line? Then we are creating internal controls, right? How we can check, okay, first line of defense, the work that first line of defense has done is correctly or not. Then we need to check ensure that transactions are accurately and compliant. Then we need to prepare the financial report and disclosure. And then if there is any mitigation risk in the business process. So these are the regulations, or basically the role and responsibility of first line of defense person is. So what is the importance of first line of defense? The major issue that if let's suppose there is any lack or any issue, if first line of defense has done, or your first line of defense is not strong, then you think all your second line and third line totally depend on your first line of defense, because whatever number you have reported should be correct and should be accurate. So what are the example of risk management that we have taken? If we are talk about that, we have the financial reporting risk, we have the operational reporting, regulatory, and the fraud risk. So you should identify at the first line of defense, right? Let's move to the next slide. Then now we are talking about the second line of defense. What is the role of a second line of defense? The second line of defense should be monitoring and testing. He is not going to work with day by day or we are posting an entry. No, being as a, let's suppose we are working as a chartered accountant and you are working in the second line of defense. What's your role and responsibility and how you will create a framework for them? You should focus on the monitoring and testing rather than doing. What first line of defense has performed, then you need to review his work. So it's correctly or not. Because if let's suppose any regulation that any regulatory body has apply on you and you are not, your first line of defense is not complying that one, the numbers are not as per the regulation that they are saying. If that's so they are saying we need to report such kind of number into a specific line item, and then we needed to give a disclosure, and the first line of defense is not doing that, then it's the responsibility of second line of defense. So you should check, okay, what first line of defense has performed. If there is any breach or any issue you identify in the first line, you should first line of defense. What are the major issues that we need to follow? Then we generally rely on the RCSAs, especially risk and control self-assessment, then issue management and tracking. These are the things that you need to follow. Then last one is third line of defense, more close to our heart, is basically audit and assurance. When we are working as a third line of defense, what we need to do and how we need to create a framework. The third line of defense is majorly when first line of defense and second line of defense has already been done. So it's basically covered as an internal audit. You need to create a lot of, if let's suppose any compliances, you need to create a lot of controls for them. And then you need to check the controls should be effectively followed. And the major issue, or we can say the responsibility of third line of defense should be independent. So we can't say, okay, first line of defense, second line of defense, whatever they have done, we approve. No, we need to do our work independently. And then while we are creating a framework, you should segregate all the responsibility. Who is going to work as a first line of defense? What is the responsibility of first line of defense? Who will be the second line of defense? What is the responsibility of second line of defense? How they will review? What are the regulations they need to follow? And then you are doing a third line of defense, then you need to create a framework according to the third line of defense. What is the internal controls that you are using? All the controls should be complied. These are the number of controls that we need to follow, right? So these are so it's basically the dependency on each line of defense. If your first line of defense is not working correctly and then second line of defense past that one, then you need to face such kind of issues, or either regulatory compliance issues. These need to address. And then if your second line of defense is not work correctly, then you are failing on the regulation side. The regulation that they impose, the regulatory authorities, you are not complying with that. So it's not a good thing for us. And on the third line of defense, if your controls are not strong and you are the framework that you are creating as a third line of defense is not strong, whatever they perform first line of defense, second line, you are not able to going to review that one. So each parameter should be clearly and correctly communicated and clearly designed, and the framework should be according to that. If let's suppose you are creating a framework for the first line of defense, you should think what exactly the first line of defense is doing. If you are creating a framework for your global client for second line of defense, then you should think what second line of defense is doing. And if you are creating a framework for your third line of defense, you should think what third line of defense is doing. You should be clear what line of defense you are working for and which parameter that you need to follow, right? Now coming on to the tools, maybe quite possible a few people are thinking, what is the use of tools that we are putting here? There is no point why first line of defense, which tool they are using, second or third line. Let me tell you. So as I mentioned in the starting, since we are chartered accountant, it's not only we need to stick our knowledge only to the reporting as on the number side. No, we can validate the system as well, because there are now in the last few years lot of scope increase of the system audit. In system we can check the regulation as well. So if let's suppose the first line of defense is working on the Oracle, SAP or Excel, whatever system they are using, being while creating a framework for a system audit, you can pitch in. Being as a chartered accountant, you can say to your client, okay, if your system is working or correct or not, let me review that one. Let me create a framework for your system as well. What number that you are getting, or what is the expectation that we need to receive? It's known as a conformance testing. It's more a broader term. I'm not going to in so much detail, but it's giving you a brief about that. Conformance is basically when you are validating the system, the regulations or the logic they want it's correct in your system. If let's say your system is getting data, then you need to publish that data. If let's say your system is not correct, then how you can say your number are correct? So it's a new area for us. We can enter into that, or you can just suggest your client while creating a framework. You can help them into the system audit as well. You can create a framework for the system. If let's suppose they are working in the first line, okay, let me do one thing. Let me give a brief about that Oracle. Let me create a entire system portfolios, or you can say entire regulations what Oracle is following, and according to that we create a framework. And the second line of defense, there are a lot of systems, and either they are using Power BI, they are ServiceNow, we have Archer. Then you just take an understanding of that system, and then you can help your client. Okay, these are the parameters that you are using. Let me do one thing. Let me create a framework for your system, how your system is working, what are the logic behind that, how you are getting the number, and then end of the day you can check, okay, the number are coming correct or not, on both ways, in term of regulation, in term of internal control. If regulation is saying number should be go into some separate line item, but your system is not following that one, it's a breach. Then you can being as a CA, we can say, okay, this is a new scope for us. We'll enter into the system side as well. We'll do a system audit, and we can say, okay, we'll check your logics, the logic is correct or not. How we can check? First we need to read the regulations, what regulation is saying, which number we need to report in a particular line item. And if let's suppose take an example of balance sheet, we are saying some kind of balance sheet number should be coming into the long-term assets, or we can say short-term assets, so there is a fixed assets, so current assets. So what is the segregation behind that? We should check the logic. If the number is short-term that they are coming, it's correct or not. If the assets we are saying it's not a more, let's say, investment, or it's basically a deposit, so we need to segregate the system is picking that number correctly or not, and the logic that behind that, it should be correct. And if you are working on the third line of defense, there are multiple systems that they are using idea audit reports, and then we have the time ins. So these are the system, putting these system here. The reason behind that, don't stick yourself to only to the audit or the numbers. You can go beyond of that, and then you can think, okay, we can enter into the system audit as well. We can suggest our client, we can create a framework for the system as well. Okay, these are the system that you are using, we'll create a framework for you. So these are the parameters that we will follow, and then according to that we'll review. How we will review? Just check the number, that what is the expectation, and according to that we create the framework for them, right? Let's move to the next slide that we have. Now we are talking, okay, now we check entire thing, what exactly the regulation, what is the compliances. Now we move to the, okay, we agree, things are correctly mapped. Okay, these are the regulation they are following. What is the role of a chartered accountant before onboarding a client? If we are going for a client, and then we want to create a framework for our global client, what are the parameters that we need to think before onboarding? So these are is basically a checklist that it's not basically the entire thing. Maybe quite possible we can increase or decrease as per the requirement or the regulation that we have, or the depending on the client size or the regulation that client is following in the country which he or they are working. So maybe get changed, but I try to cover as much as I can. So first, let's suppose we take an example of, let's say, client identification. You should understand what is the business that client is doing. First, you need to identify what is your client. So if we go to the next slide, let me show you, just hold on a second. Yeah. So first you need to understand what exactly the business they are doing, because we can't say, okay, if a client is approaching, we never go directly, okay, let's sign the engagement. No, first we need to check what exactly he is doing, because while we are working for a global client, it's always risky to take that client without checking all the scenarios. If let's say he's involved in some kind of activities that those are not permissible as per ICAI, or they are involved in any business that ICAI is not allowed, we can't say yes to that client, right? Then moving to the ownership and group structuring, what exactly the owner, who is the owner of that group, who is going to, what is kind of structuring. If let's suppose we have any subsidiary, if let's suppose we have any tie, they have any tie of those countries, those are not allowed as per ICAI. We can't work with those type of countries, or any transaction we can't approve. Then we should think before approving that one, before doing an onboarding, right? The next one is the ethical compliances. We should clearly communicate, should be independent audit. That's the first step that we need to take, and there is no conflict of interest. If let's suppose you are doing some kind of work or any regulation that you are reviewing and the same thing preparing by your organization, you can't say, okay, both things should be go parallelly. No, you should clearly say, okay, this should be not will work because in that the same person can't prepare and review the same thing, right? Then next point that we have a client due diligence before accepting a client. Then we do a client due diligence. What is the source of funding behind that? What is the background? Because now these days, let's suppose they involve in any money laundering or some kind of activities, and you accept that audit of that, then it's an issue for you as well. So before accepting or before onboarding a global client, you should think what exactly business they are doing. Is there is what is the source of income they have, or what is the background behind that? You should think about that. So we can't say, okay, we 100% we before onboarding that client we can validate all the things, but you should think, okay, these are the parameters that we need to show. Then we have the regulatory risk assessment. What the regulations applies on that? What is the limitation? If there is any history of compliances or if there is any breach of compliances, you should check before accepting that client, right? Then now moving to the service capability checks, what exactly the service, if let's say you are accepting a client, you should check before accepting that client, whether you have, your firm have that kind of capabilities to handle that client or not. If let's suppose you are agreeing a client that those are working on which say or which countries that you are not aware about the regulation, or maybe some kind of restriction with working with that countries. So you should think about that. And then moving to the next one is financial risk. If there is any financial risk involved, the first thing came into our mind is basically the fee and payment term. You should clear about that one. Okay, how much is the fee and then how much is the payment term we should get in the time. What is the time frame, either monthly, weekly? It's totally depending on you, right? The next one is the engagement risk rating. How much is the risk that involved in that engagement? It's a low risk, medium risk, or high risk, and what kind of assessment you should do before accepting that one. Then when you say, okay, you are good, then you will check over the what is the engagement term, and later you should be clear about your engagement term, on which basis you are doing an engagement, on which basis you are accepting that one, right? Next one is the data privacy review. If let's suppose data should be protected, and we can't say, okay, we are accepting that one, and data where we need to save, you should be clear about who is responsible for that data, where we need to save. Because generally the issue that we face is for the global client, it's basically if they want to review the data or they want to leverage that one, then how we can send it to them. So we in the starting we agree, okay, where we need to save the data, right? Then if there is any regulatory illness, so if there is any breach or understanding of filing obligation, you should be clear about that. And the next one is the internal approval. First, we check with your partner or within the team assignment or who is going to work on that. We should discuss within the team. Okay, we are going to accept that. And the final step is final client acceptance. Okay, if you are good with that, all the parameters are complied, then you should say, okay, sign the engagement letter. Then according to that, we can move to that forward. Now coming on to the major issues. So this is the slide that I have put it, that generally it's when you're working for a global client, the lot of major issue that we identify, what exactly the major issue you will find. First one is when you are working for a global client, maybe working in different regulation, then it's a conflict of regulation, change or overlapping of regulations. Then we have multiple accounting framework. Either you are working on IFRS, GAAPs, Ind AS, whatever you need to apply, or global taxation or transfer pricing, which pillar is, let's suppose they are working on pillar 2 or then transfer pricing. So these are the issues that a CA face while working for a global client, and how we need to mitigate, we'll cover into that. Next word is basically regulatory changes. If let's suppose there is any change in the regulation, then how will you update yourself? And then we have the internal control, SOX compliances, we have the regulatory reporting and licensing, and then data quality and system limitation. If let's suppose the client is working on some kind of system and you don't have such kind of access, if let's suppose the confidentiality is not due to confidential, client is saying we can't give you the access of that system, then how will you do audit? So you should think while doing those. These are the issues generally that we face while working as a chartered accountant for a global client, right? Now coming on to that, if let's say you agree with your client, or if the client is saying, okay, we are good, and then you are also saying that all the terms that you have agreed, you have covered that one. Now we need to set a framework, how we can start the audit, and then how we can create a framework. First, set up a call with your client, just known as a walkthrough call, in which you should know what the parameter that we need to clear while you are going with the call with your client. Because issue that when you accept that engagement, then you need to start the working on that. So how we need to progress, how we need to, what step we need to follow. So for that, creating a framework, you should set up a call with your client that's known as a walkthrough call, or it's a more or less a friendly call in which they will explain you what exactly they are doing. So what things that we need to cover into a walkthrough? First, you need to define your objective and scope. What is the objective? What is the scope and what is the parameter? If let's assume you are working on a specific domain, you should know, okay, this is domain that we need to work, and this is the area where we need to pitch in on. These are the issue that we need to identify. The second one is should be clearly communicate the engagement and dependence check. Should be confirmed engagement is clearly independent. You don't know to just conflict of interest, or you there is no transparency. You should be clear and you should be communicate to your client, and then you should be agree on that. The next point is basically the stakeholder identification and scheduling. You should check with your stakeholders in which areas or the local terms or local authorities that they are using, and then how will you coordinate with their stakeholder. Either you are using the local teams you need to coordinate, or the directly someone, if let's say your client is working different segment, and then you need to create a framework from them. Just check with them, okay, in which countries they are working and how we need to support. According to that, we can say, okay, for if let's suppose they are working in US, UK, Canada, who is responsible for US, who is responsible for UK, who is responsible for Canada. You need to identify the local teams where, and so that you can do a coordination with them. The next one is the pre-work information request. If let's say pre-work information is known as pre-walkthrough information, is basically you should go with SOPs. SOP is basically a standard operating procedure. When you work with any client, so client is working, there must be some kind of SOP or procedure that they are following. If they are not following, first you should create a SOP. What is the standard operating procedure? How the system is working, how you just enter into a transition, then you should need out all the steps there, right? Then you should understand the process and what exactly the process and planning behind that. What is the steps that they need to follow? Review the entire process flow map, how they are working, what are the steps they need to follow, and what is the outcome of that one, right? Then execute a walkthrough. Then you should understand all the walkthrough terms, and then you need to note down and each and every step very clearly. Then the next step is that validating design and effectiveness. What we need to cover: validating design and effectiveness. When you are working with your client, you are setting up a time with your client, and then you check, okay, what is the effectiveness, what are the controls they want, and what is our suggestion behind that. Okay, these are the controls should be placed, right? The next one is that documentation and evidence, as we discussed, where we need to save the documentation, with whom we need to save the documentation. If let's suppose they are saying only documentation should be shared with your partner or someone else, you should think and you should already discuss. And the next one is, if let's suppose you identify any gap. Generally, if let's suppose we have a global, we can say domestic client, we can say, okay, we just pick a call and then make a call to them. Okay, these are the issue that we identified. In the global side, you should think, okay, what exactly the parameter you need to follow. If let's suppose you are working, if I identify any issues and any assessment, then you should think which mode that they want us to use. You should communicate verbally, you should communicate document, you should over mail, or whom we need to cover into that mail, right? Then we have the reporting and communication. When we complete that report, to whom we need to submit and whom we need to communicate. While filing a report, you should send a confirmation with to the whatever hierarchy that they are following. If they are saying all the partners should be marked, you should follow that one. And the last one is that follow up and next step. Then in going forward, each time you set up a frequent call with them, and you should understand what exactly the steps that you need to follow, right? So in the next step, we are trying to cover, these are the more detail. In the interest of time, let me just move to that. What is the purpose? Then we already cover what is the purpose and the objective that we are accepting that one. Then next one is moving to the engagement. Then while you are accepting that engagement should be clearly communicated and without any conflict or interest. Then again, then next moving to the stakeholder identification, to whom we need to report, as we discussed, which person and which time zone that we want us to follow. Let's say they are saying they are working for US, they are working for Canada. Let's say they have any expectation from us while creating a framework for them, you should clearly comment which time zone they want us to follow, right? Then pre-walkthrough informations, what exactly pre-walkthrough, you can check with your SOPs, then you can check if there is any issue or compliance in the past or any previous report, then you can validate. Then process understanding, check, you can review end-to-end process, and then you can validate each step of that process. right? Then execute the walkthrough and set up the walkthroughs. Then validating design and effectiveness, you should check the designing of that, what exactly the designing that we have, that one. Right, then define the objective and evidences documentation, where we need to save the documentation, where we need to save the evidences, as we already discussed that one, whether it's on the SharePoint or any other platform they want us to use, we should know, right? Then define the scope, what exactly the impact statement, if there is any gap identification, whom we need to report. If let's suppose a risk, depending on the risk, it's a high risk, moderate risk, or low risk, which category and which to whom we need to report. If they were saying if there is any high risk, should report to the partner or should report to someone else, you should follow the same accordingly. Then last one is the reporting and communication. Once we complete that report, to whom we need to submit that report and whom we need to communicate, right? And this is the example of a, we can say, compliance dashboard that I have created here. So if let's say you are working, then you need to show your management such kind of, it's not basically the fixed thing that you need to follow. You create a such kind of scenario either on the pivot charts, or you can say the other parameter that you use, Power BI, show them, okay, this is the issues that we have, high risk, moderate risk, or low risk, so that management should know, okay, which part that they need to take on the priority basis, right? Then the solution, as we discussed earlier, the lot of issues or challenges that we face by chartered accountant while doing a global audit for a client. So what is the solution that we need? If let's suppose we have identified the global compliances, we can say when we're working for a global client, so we follow the global compliances that we should create a framework and a standard policy. So we need to just agree with all the client and all the businesses that they have in different countries should check, and then we should create a centralized policy for them. And the next one is multi-GAAP. Then we create a such kind of accounting hub where we need to put IFRS, US GAAP accounting reconciliation, so that each country person who is working for your client, then while creating a framework, you should know, okay, what parameter they are following. You should create a such kind of accounting hub there where we need to save all the reconciliations. Then we have global taxation. You should know what is the global taxation is. While creating a framework, you should understand two pillars, what exactly the transfer pricing and which country which you need to follow that pattern, right? Then next issue that we face is basically the regulatory monitoring and updates. If there is any change in the regulation, then how will you track? Then generally we, if let's say any tracking changes, we need to will take control according to that, and we create a framework of if there is any change in the regulation, we should know these are the changes, and then we have applied on that. And the next one is we are talking about that if there is any technology stuck, or then you are using any ERP to remove such kind of thing, rather than doing a consolidation on Excel, if less so possible and client can afford, then suggest them, okay, move to the consolidated system rather than individual systems, right? Next one is the data quality and cross-border. You should think while doing saving the data and then sharing the data with other with client or other locations, you should comply with that, and creating a framework things that went into your mind. You can't share the data directly, should save on a location, and only an authorized person can review that one, right? These are the parameters that we need to consider while creating our framework. Then now moving to the next one, then if there is any KYC compliance, you should comply, and you should think, okay, try to automate that KYC if possible. If any person is doing, or anyone is performing the KYC at any location point of time or any point of time, they should be automated and they can be happen. And then global coordination on cross-functioning teams, should set up some time with the cross-functioning team, set up a call on the teams, or maybe quite possible, and we connect within a week, or depending on the requirement of the business, then you can check within the team, okay, how they are working, so that they know each other and then they can work accordingly. Now we are trying to cover a one pager of checklist. If let's suppose we have completed all the things, and then we need to think, okay, how the performance that we have done is correctly or not. So it's not basically we can say the exclusive list that we can't add or reduce. Yes, we can remove few things and we can add few things depending on the client side. So that's my basically according to my knowledge, I created that one. First one is the regulatory landscape. Identify the applicable jurisdiction and regulation. You need to create a checklist while doing a client global audit, creating a framework. This is the checklist we need to follow. We are following all the regulatory requirements that we have. Any MAB or industry specific regulation, we should check we are complying on that. If there is any track or regulatory update, we should check if there is any update happen, we are applying that one or not. So these are the regulation check. And then moving to the next one is financial reporting. if you are doing creating a checklist for a financial reporting while creating a framework, you should include that one applicability of which standard are applies on accounting, applicable IFRS, US GAAP, or Ind AS. You should be clearly, if let's say any legal entity that you are working and the other entity is working on some other country, so which regulation are applied, according to that we create a checklist and then we need to do a check mark. These are being complied. Next one is the internal control and governance. If let's suppose we are working and we're creating a framework for our client, we should know okay, which are internal control that we are using. If let's say we are working on the governance side, SOX is comply or not, then we need to add that point in your checklist while creating a framework. Internal controls are up to mark, there is no breach. If there is any breach, what action we need to take, right? Next step we need to include in our checklist while creating a framework: risk management and assurance. RCSA should be performed accurately. If yes, then we can put as a tick mark as a green, or we can say yes, we have done. If let's suppose we are saying no, there is any breach, you should think how long it will take to rectify that one. And then if let's suppose we have any issue identification, to whom we need to escalate. So basically the hierarchy we need to follow, and the what exactly the corrective action is, who is going to find that corrective action, who is applying that corrective action, we need to think according to that, and then we need to follow that one. Once we done that one, we can do use as a checklist into your checklist. Then we have the regulatory compliance and testing. If let's suppose you are doing any compliance testing, or if you are doing any regulatory reporting accurately, or the timelines, you should include that in your framework. These are the regulatory compliances that we are following, and then these are the regulatory compliances we have applied on our client. So this is the list. When you are doing creating a framework, you should include that one into your checklist. Okay, these are the compliances that we are following. We are doing all the tick mark for that, and then according to that we are creating the separate checklist, right? Now we have global taxation and transfer pricing, which taxation is applicable on us. Then according to that, we have created a checkpoint and include your in your framework for when you're working for a global client. Then next one is moving to the A11 financial crime. If there is any KYC required, you should include that one, and then you are following that portion also. Then we have the regulatory licensing and reporting. If let's say what time frame that they have allowed us, if let's suppose we need to complete the regulatory filing within 30 days, we should include that one into a framework. Each 30 days we are complying, and who is going to review, who is responsible for that. These are the checkpoint that you should consider. And the last one is the ethical and governance. We should clearly communicate. It's from the ICA as well, and the code of conduct, it clearly mentioned audit should be independent and should be transparent. So these are the checkpoints that you need to include while creating your framework for a client. So that's it from my side. Anything, questions? Over to you, sir. Suraj, sir.
Okay, sir. So, sir, the first question we have is when onboarding a small scale global client, which specific regulatory and compliance frameworks should be prioritized to ensure international alignment?
So if we talk about we can say, if we are talking about that, okay, we have small client, right? That's the question. So if you are
Yes, yes.
working for a small client, so it's not possible to cover all the, so you can say, the SOX compliances and other things, but you should think which are the more risk areas that we need to control, we need to take care. What exactly the internal control that we are following, if let's say they are working in the past, what is the audit report that we have, then we need to use those documentation for our knowledge purpose. So these are the things that we are considering while doing is, you can say, working for a small client rather than large client, because issue that when you are working for a large client, things are more structured way. But if let's say you are working for a small client and you are creating a framework for a small client, we can't go into that detail, because thing is that we have the limitation of time. If let's say first we need to check, okay, we need to complete the framework within a month or within 15 days, quite possible. According to that, we'll design the framework, and then what exactly the internal control in place, you should think about those internal control, and then we need to cover those internal control, and what exactly the major issues or risk area, then we need to highlight according to that.
Okay, sir. Next question is there any platform from where prospective clients may be approached?
So if we talk about the prospective client, so ideally it should not be part of this session because my role is basically tell them, okay, you have the client and then you need to create the platform. Then we can cover. If we are talking about the platform, yes, we have that, or maybe quite possible institute will set up a separate session for them. If you want me to answer, yes, let me just answer in very shortly. Yes, we have a framework where we can go globally. There are few sites or freelancer sites that you can work accordingly, where you can register yourself and then you can work.
Okay, sir. So next question is how can we best support a client who hasn't yet identified their global obligations?
So that's the best part for us. If let's suppose client don't know anything, then it's good for us, because if let's suppose client know more than us, then it's not good for us. It's when client don't know, then it's always better. First, we need to identify in which area client is working. Then tell them first we need to work on three pillars. Like let's suppose first one is physical presence. If let's suppose he is working in any country physically, so we need to check what exactly the regulation on that country, right? You should create a document and create a framework accordingly. Then we need to check if let's suppose they are working virtually, in which country they are working, they have the offices and virtually they are working. Then we need to check the framework according to them and then tell your client, okay, these are the framework you should follow because you are working on there. And the last one, the most important thing, the economically, where we are earning more than we should comply all the regulations. If let's say you are earning in which country and there is any regulation on that, you should comply. So these are the things you should tell your client while creating a framework. These are either physically, virtually, or economically. So these are the parameters that we need to follow.
Yes, sir. Some of them are asking the direct question that like how to get international clients.
So how to get international client? I think that's the same thing I mentioned. It's not been part of my session. The Idly Institute should conduct a more session on that. But if you want me to answer, there are a lot of platforms that we have known as freelancing platform there where you need to register and you can get the international work. So I don't want to name here which platform that we need to use. You can do Google or you can check your own self. So there are a lot of platforms you can register and then you can get the work. In terms of starting, you will not get the, you can say, the large work or the something. First you can do start working on the, either you are reviewing something or you are doing a bookkeeping or you are creating some kind of control or you are reviewing a control, because I know a few platforms where people are hiring chartered accountant for the interview purpose. They hire us, okay, on the basis of that they will say, okay, on our behalf you can take the interviews and they will pay you. So there are a lot of scopes we have. If you are talking about the hiring, you are talking about the accounting review, you are talking about the, you, if someone has already worked and then there wants as a foresight, so they can. So there are a lot of platform. I don't want to quote any name or something. You should go on Google and then check, or either institute should conduct a more session on that.
Okay, so the next question is in addition to financial reporting and tax, what are the primary non-financial compliance and the regulatory domains we need to address for a global entity?
Yeah, that's a good question. Generally, I always say, since we are chartered accountant, the first thing came into our mind is basically we need to work on the taxation or we need to work on the numbers. Why we are stick ourselves only on the number and the reporting aspect? You should think about the system audit as well. You should think about the money laundering. You should think about the other aspects. We have the cyber security audit, we have the IT audit, we have the system audit, we have the other compliances. You should go into that and then check, okay, let's take an example of system audit we are talking about. Then we know we are getting the number is coming definitely from a system, and then what is the logic behind that system, so we can check, okay, the logic is correct or not. If we are preparing the number, we know more than other people that how number is creating, and when we know how the things are creating, we can check how the numbers are complying in the system as well. So we need to just know the regulations or the, you can say, the coding behind that. Coming on to that part, since we are chartered accountant, we always say we are not good on the coding side, but there are a lot of tools that we can use to validate those system or the logics. So we can leverage that one. So answer is that you can enter into the conformance side, you can check on the system audit. IT audit, cyber audit, or the money laundering. There are a lot of other things.
Okay, sir. Understood. Next one, in an era of rapid digital transformation, what are the emerging opportunities for chartered accountants to lead AI governance and IT risk management for global clients?
So when a new technology came, it's go on the both the side. So we have some kind of positive, we have some kind of negative. If you take an example of Lehman, that's happened in 2008, I think. So when crisis happens, so benefit and losses both come parallelly. So losses is we just check the financial crisis, and if we go on the benefit side, before Lehman crash, regulatory imposed only 30-40 returns on the banking. After the crash, they introduced more than 300 to 400 returns. Now they are increasing our work, so it's beneficial for us. Now, if you are coming on the IT side, if they introduce any IT or AI governance, it's good for us. Then start working on the AI side as well. Take knowledge about that. If you are willing to do that one, create modeling of that. Now these days, creating financial modeling or AI modeling is very frequent. Lot of chartered accountants that I know, they are working on that domain. So enter into that domain, just take an expertise knowledge, work on that one, and then you can leverage the AI part as well. So that's the emerging, we can say it's increase our work. Why we are thinking that it's reducing our, we can say, okay, now we have two more domains to do a audit. So that's the beauty.
Okay, sir. Next one, when auditing an automated entity, how do we align our methodology with global standards?
Okay. Now, thing is that when you are working, let's suppose your client is working, or you are approaching to a client, and then you need to create a framework, and then they are working on automatically, manually, and semi-automatically. We'll cover all the three scenarios. Rather than automatically, we cover all the three scenarios. If let's suppose they are doing manually, so you will do the manual test, and if what exactly manual approach that we are following in the entire scenario. If you are working with a domestic client, most of the things are they are doing manually. They are putting the entries, they are putting the reviewing, and then creating a trial and then balance sheet. You can check the manually. If let's suppose the automation involved, the first thing that we need to check, what is BRD behind that? What is the business requirement document that we have? You should reach out to your client. If let's say automation has been happen, or any system has automated by any person, then you should reach out to your client, just ask them to share the BRD, what is the business requirement document. And the second step, you should ask them the SOP, what is the standard operating procedure, how we are using that system, what exactly the system outcome is, what input we are giving, and what is the exact output that we are receiving. So for automation, you should go with BRD first, then you should create a SOP. SOP is standard operating procedure. If client have the SOP, then we are good. If don't, then suggest your client, then okay, we'll create a SOP for you, and then we'll create a framework for the SOP, what exactly the step we need to follow, and then check in detail side. So best part of automation, if you done the audit once, if you check the logic once, then you need not to check the logic again and again. Because thing is that, let's suppose we have 100, or we rather than 100, we are taking thousands of numbers we have, and then we need to do an audit for that transition testing. In manual, you need to check the entire 1,000 numbers or 1,000 records. But if you automation, if things are coming, you need to check the logic only. Once you check the logic, that the system is correct, and then we can check, okay, the 1,000 records are correct, because the logic is same for all the things. For the answer side, we can say automation, you should go with BRDs, SOPs, and then understand what exactly the parameter that they are following with that.
Okay, sir. Next one, how important is regulatory reporting for global financial institutions?
Sorry, could you please repeat?
So, how important is regulatory reporting for global financial institutions?
So regulatory is basically the key, because when you are working for a global client, regulatory requirement are mandatory. You can't skip the regulatory requirement. If let's suppose if there is any breach in the regulation, they will cancel the license. They'll impose a lot of penalties. So regulatory is the main key. If we are talking about the compliances side, maybe compliances we can miss something because it's cause a reputational loss or a financial loss. If you do any breach in the regulation, they will cancel our license, or they will impose heavy penalties. So regulation, basically regulatory is the major key. So we need to comply, and then according to that, our control, we should check on timely basis the regulation that they impose, it's comply, and then we are following the regulations.
Okay, sir. So, what are the major financial reporting challenges for global clients? Like we know that cross-border audit coordination and all. So, what are the major financial reporting challenges for global clients?
So if we are talking about the reporting challenges that we covered in the slide, the reporting challenges, the reporting challenge that we face is basically the location. If let's suppose you are working for a domestic client, then how will you deal? If you need any information, you just pick your phone, then call him, okay, this is the information that you required, or just set up a time, then ask him to, they will visit your office, and then you can discuss the financial thing. Okay, these are the things are not correctly. And the other side, if you are working for a global client, how then you will reach? Then generally first one is the time frame, then we need to schedule that one. Then second is the mode, generally we rely on the Teams, Zoom meetings. And the third one is majorly that we face is basically the tone that we are using. If let's suppose we are forcing someone global client, we can't say, okay, in every half an hour, okay, provide this data, provide this data, provide this data. Is quite easy for the domestic, but we can't go with the global client. We say, okay, this is the information that we use. We should be more structured when you are working with a global client, and the tone that we are using for the global client. Domestic is a little bit differ because it's maybe quite of, you can say, the terms or the bond that we have, but in that term, because when you meet your client, it created some kind of bond, but generally when you are talking on a phone, it's a different thing. So that's a major thing. And the next one is the financial side, is basically the different tax applicabilities or the systems that they are using. If let's suppose you are working for a global client, lot of tax applicabilities are on that. So you need to think, okay, which tax applicability on your client, and then how will you mitigate that one. On the system side, if let's suppose your client is using Oracle, the other side is using ERP, and the other side is using FinTech, then you should know, okay, how we need to get the data from there, how we need to consolidate, how we need to review that one. So these are the major challenges that you face. And then if we come with the solution, what we need to do, you need to create a standard policy for them, and you should save at a one place where all the people can review that one. And you need to create a frame including all the persons that you are working with, and then you should check, okay, they are complying the regulation correctly or not. So that's the solution for that.
Okay, sir. So next one, how does the compliance shift when moving from an one-time regulatory requirement to a recurring operational obligation?
So if you are working for the, you can say, talk about, okay, let's suppose you are talking about we have one time activity and we have the recurring, right? Okay, if you are working for it activity, or you are creating a
Yes.
compliance, or you're creating a framework for the, we need to complete a one-time activity. It's quite easy that you need to complete and check if let's say the things are recurring, and then we need to do the things again and again. So it's a long-term project. You need to comply. The first step that you need to take, it should be document. You should document the when is the timeline, who is responsible, then create the clear communication. It's clearly communicate to the, okay, who is the person who is the taking the ownership. If let's suppose take an example, we are taking an example, we have a hotel industry, and in hotel industry they will say at every day, and each hotel should transfer the entire money to the HQ, and now they skip something, so it's not good for us. So if you are working for a recurring thing or a one time activity, recurring should be more focusing on the, we can say, ownership, who is responsible, who is going to take the review, and who is going to review that work. So according to that, we create the internal controls, whether 4 eye check is required, whether the person is following that pattern or not. So these are the major gaps that we have. For one time we just follow the one time activity, okay, these are the compliance, and check, okay, we get the result, and then we can close that report. But in recurring we can't do that one. So majorly the ownership and document is the key for that. You should be strong on your documentation, you should be strong on your ownership, who is responsible for which activity and who is going to review that one.
Okay, sir. So the next one, in our experience with global entities, what are the common systematic failures in their regulatory frameworks that lead to audit findings or penalties?
So majorly, if we talk about the system failure, as we know, these are these days more or less organizations, or we can say the client, are shifting from manual to automate. They are trying to achieve, you can say, from manual to systems. So issue that we are facing in the system audit, while doing a system audit, the major issue that we are facing is basically the manual error that they are posting. If your person is posting something into the system, it's not correct, then it's a issue. Second one is the knowledge of the system is also a lack, because let's suppose if person is working is not having such complete knowledge, then it will create a lot of issue for them, because client is working and client expectation is very clear that this person is working on that system, but the issue is that the system is not clear and the person is not clear about that system, then it's a create a issue. Next one is the some maybe quite possible some kind of trainings or some other things that cause system issue. If let's suppose on timely basis we are not giving any training, then person who is working on that is not up to date. Or if there is any modification into the system and we are not creating any documentation, if let's suppose you are apply any changes on any system, or then you have not documented that one, and then in the future the person who is working and then they move to the some other organization, then how will you deal with that? So while creating a framework, you should think about that. You should include each and every step. Who is working, how we are working, what is the standard operating procedure, what is the BRD behind that? If let's suppose someone build that system and they move from other one organization to other, then how will we tackle? So we should create the documentation. You should be strong on that side. Create a BRD, save that one on the SharePoints, or the only the you can say the authorized person can have that access of that one. So these are the things majorly that we face on the system audit. And in comply of that, you should think, okay, creating a system audit, you can check, okay, what are the control you have placed, whether any modification has been done on timely basis, and then you are checking both the result. If let's suppose you have done any modification, but you are not checking the past result, you are working on the current result only, then how will we know if the number are correct or not? If let's suppose the number are not correct, then how will we deal with that? So that's it.
Okay, sir. Great. Thank you. Now, next one, how do you assess whether a compliance framework is effective and not just documented?
So that's the question for the practicing thing only. So we can say while we are doing a compliance, it's not a documentation only, or we can say generally not a tick mark that we generally follow. So that approach that generally when we discuss, or and I was doing an audit, so that I understand what we are doing. We are working on TOE, that's basically task, or we can say we are just focusing on the task rather than effectiveness. If let's suppose we need to strictly follow the few rules when we were doing an audit, first we create a control. It's a good thing that we are working effectively, right? We are creating a task, and then how we need to validate that it's working correctly or not, we need to focus on that. Generally what we do in our audit, we just follow, okay, what in past we have followed, we follow the same scenarios, and then we apply the audit. If you really wants to create any impact, or if you really wants to do something new, then check the scenarios. Don't go with the past scenario or past report only. Just take a reference and think beyond of that. If you are validating any audit or any number, should check the system. If you time permits you, just take a one step ahead and then find, okay, if the system is working correctly, the number are coming from a system, what is the logic behind that? If the number is correctly mapped, then we are good. So ideally when you are doing an audit, you should go one step ahead, and rather than you are just focusing on the number, think something different, other aspect also, and then you need to cover those aspects also.
Okay, sir. So next one, how do you respond to regulatory findings or enforcement actions?
So if we find anything, or let's suppose if there is any issue that we identify, or the regulators, they just send it to the regulation, or they are saying, okay, you have this issue that you need to take care. First, you need to create a problem statement. What is the problem? While creating a framework, you should understand what is the problem. Then you need to clearly just note down, this is the problem that we have, or this is the query that we have received. Then now move to the next step. What is the root cause behind that? Why this happened? So if let's suppose we are creating any framework or we are creating any checklist, then we check, okay, what is the root cause behind that? What is the reason? What are the internal control failures? When we get to know the root cause analysis, then we start working on the remediation part. Never go with that, okay, we are finding that one. Oh no, it's always good to suggest them, okay, these are the steps we need to take to avoid such kind of scenario. If you don't know such kind of complete, if you have any background, just tell them, okay, these are the information that I have, and according to me, ideally these should be the remediation plan. If let's say you don't have detailed knowledge, just suggest them, or if you're having such kind of great knowledge about that domain, just clearly communicate these are the remediation steps that we need to follow, and then create into a statement, okay, these are the problem statement, these are the root cause analysis, these are the impacts. What exactly the impact is, if let's say there is any regulation breach, or it's a high risk line item, or it's a major risk, then you should clearly communicate to your client that this is a major thing, rather than we are saying, okay, this is the issue that we identify. No, it's always good to tell them what is the impact behind that. If maybe it's a small issue, then it's a good thing. Client will, when a client will have time, they will say, if let's say it's a big issue, or it's a regulatory governance issue, then they should take the action immediately. So let's clearly communicate, address that one problem statement, what is the root cause analysis, what is the impact behind that, and what is the remediation plan. So you should stick and then create a checklist of that, and then send it to your client and discuss with your client.
Okay, sir. Thank you. Next one, what are the certificate courses specifically designed to help Indian chartered accountants handle international clients?
So that's the beauty of a chartered accountant. Whenever we get chance to study more, don't skip things. So if we could talk about the certification, I think you should check on the ICI website. ICI mentioned a lot of certification. Even this initiative is part of that, because we are trying to cover and we are trying to share our knowledge regarding that one also. So if you really wants to do a certification, totally depending on which domain you wants to pursue. There is no specific one certification we can say. If you wants to go into international taxation, you go with the international taxation certificate. If you also do a data analysis, if you want to do a data analysis or money laundering, we need to do or system audit according to that. So if you go to the CA Institute website, there are a lot of certification they have mentioned. You can leverage that one, or if you want to go beyond of that one, then you can check on the Google site depending on the requirement or the domain that you are pursuing. If you wants to do a US taxation, we can't say, okay, take the CISA or any other domain. No, it's totally depending on which domain you want to pursue. So if let's say you are specifically for a specific domain, then go with that certification, and then you can do, right?
So one question came like, what is PRD?
What is?
What is PRD?
It's PRD or BRD?
P.
So maybe ideally it should be PRD. I'm not sure. So maybe ideally
I
they
think
are
it's a
asking.
product requirement document, something like that. It's
Okay, so PR,
one
so
question.
okay, so we are talking about the BRDs and PRDs. Okay, so PRD is basically product requirement document. Whenever you are working with a new client, so as I mentioned, when you are working on a system, they require the BRD, business requirement document. If you are working on a new product, if let's say your client is increasing, or the domain they are into either merger, acquisition, or they are acquiring something, then we go with the PRD. So it is a product requirement document. What exactly the parameter that we need to check? If let's say they are doing any merger or any kind of they are restructuring, you should think about that, which domain they are entering, what is the benefit and what is the losses. That benefit and losses come parallelly, because it's that if you are doing a merger, maybe quite possible you are doing some kind of benefit, then maybe quite possible we have some kind of losses as well. So go into the product, when you are reviewing that periodic, basically the product requirements, then you should check which are the product you are working and which are the benefit for your client. So according to your client, you change that one. Right.
Okay, sir. Next one, how can we resolve conflicts between global policy and local regulation?
So generally, when you are working for a global client, you will face such kind of issues. Let's suppose you are working, your client is working different location. Then how will you deal with that? If let's suppose they are working in a US and then second entity is in UK, then you need to follow both the regulations. Then first you need to check, okay, which regulation that, as I mentioned, depending on the, if let's so depending on the three pillars, what is the physical presence, what is the virtual and the economical presence. So according to that, you need to check. If let's suppose take an example, and the regulation they were saying we can't in every you can say in every 30 days we need to pay our salary to our organization, right? And the HQ apply this policy, and the same thing happen on the other regulation. In other country they were saying we need to pay the salary within 15 days. Then how will you deal with that? First you will check, okay, which is the easier term, or we can say we can comply both the regulation. If let's suppose we are saying we need to pay the salary within 15 days, then pay it within 15 days. It's maybe easier for them, because we are complying both the regulation. They are saying we can't pay salary beyond 30 days, we are paying early. So we need to do a coordination between them. Okay, which regulation that we are applying. So it's not basically a strict or a logic. We can say, okay, these are the parameter you need to follow depending on the client as well as on the regulation. If let's say the regulation is saying we can leverage that window or we can licensing with any regulatory, and that's the other country is saying we can't licensing with any regulatory, so you should stick on that we can't licensing, because thing is that if there is any breach on the regulation of that country in which we are working or we are earning, then we should be strict on that.
Okay, sir, that's the end of the Q&A session. And as we come to the conclusion of today's enriching session on regulatory and compliance framework for global client, I extend my sincere gratitude to everyone who made this seminar meaningful and impactful. First and foremost, I express our heartfelt thanks to CA Harshvardhan for delivering an insightful and knowledge-rich session. His deep expertise in global regulatory reporting, risk management, Federal Reserve, standards, and compliance has provided us with valuable perspective and practical takeaway that will greatly benefits professionals serving global clients. My gratitude to the ICI, the Global Udan Committee, the organizing team, and all behind the scenes contributors who worked tirelessly to ensure the success of this webinar. A special thank you to all participants and members who joined us today, engaged actively, and contributed to the richness of this discussion. And actually, I'm very happy to see the strong participation in the Global Udan initiative. This clear reflects the growing interest and commitment of chartered accountants to expand beyond domestic practice and explore global opportunities. It demonstrates our profession's readiness to adapt the international regulatory frameworks, cross-border engagements, and global client expectations. The enthusiasm we see here today is a strong indicator that Indian chartered accountants are prepared to build a meaningful presence on the global stage. So, on behalf of ICI and the Global Udan team, I once again thank everyone for their participation and support. Wishing you all continued success. Thank you and have a wonderful day.
Thank you, sir. Thanks for the opportunity.
Thank you, sir. Thank you, sir.
Thank you. Thank you.